In this video, traders, we're going to talk about what's the point in having a daily trading plan if most of the time the market doesn't even stick to what you thought it was going to do anyway. Stay tuned. Hey guys, warm welcome to you. So I asked myself this question many years ago, and it's a question that some people ask quite frequently actually, and it's a really sensible question. And the question is, what's the point in running through your daily process and coming up with a plan if most of the time the market doesn't stick to your plan? Now, it's worth pointing out that the market doesn't need to stick to your plan for it to be a great trading day, especially as a day trader, because as a day trader, you have a roadmap, you have an idea of what you're looking for, but the day can change instantly. You know, the day can suddenly rip off the open and it's an opening drive type day, and then it suddenly changes phase. You know, it's very challenging for us to predict every little turn and squeak and this, you know, it's not going to happen. We kind of look at the market in terms of phases. You know, we have the open, and it might be very strong, and then it might just kind of stagnate, and then it might sit there and do nothing for a bit. Then it may take out the low, and we start getting some, you know, there's various distinct different segments to the market, and to be able to plan that out is just asking too much. Now listen, some days we write a plan and the market seems to stick to the plan, it's very good, but really as traders we're looking to identify those little chunks where we have the edge. So hey, this is what I've seen this before, I've recognized this before, this is how I respond to it. But back to the initial point before we go into that, kind of down that rabbit hole, is that the point is, guys, is that you have a process at the beginning of the day. So you run through your process, whatever that is, and just by the very nature of the process means that you feel like you're prepared. Now I have a process and you may have a process that you run through. It might be a short process, might be a long process, depending on what you're trading, how you're trading, etc. And if you come up with a trading plan, which is a roadmap, used that word before, but it's a really good kind of way of looking at it, of what you expect. So let's say the market's gapping down. So we can talk about literally how the market was today when I was looking at it. We had a gap down in the market. We'd been kind of really weak. We'd had a couple of days of bounce. Now we're gapping down again. So I start to look at a roadmap and I say, okay, these are the potential things that could happen. We could get a real sell off the open, as a lot of people kind of sell into the lows, or we could kind of stagnate. And I'm kind of thinking about how we're going to move, and I have a plan of, okay, these are the levels I want to potentially get involved in. This is the level that maybe would be a target if we got on the end of a long trade. Maybe this would be a level where we'd look to stay short if it stayed below it, and we start to come up with a plan. Now some days the plan looks quite obvious because you look at the daily chart, you're like, okay, yesterday we had this, I'm very much expecting this today, because the daily chart has the pattern that you can extrapolate out onto your intraday chart. And let's say you had a shooting star, or let's say you had something like that, you said, oh, I expect the follow through from today, so whatever happens today, any short-term strength, I'll look to sell into it even better if it's up to my resistance. Sometimes it's very clear and the market will stick to that and it's great and it works very nicely for you, but sometimes, you know, it's going to do something before it does what you expect. In other words, let's say you think the market's going to, you put in a red candle on the day, you think, hey, it's gapping down and I think it's going to kind of end the day lower. But that's not to say it can't drive off the open, put in a really strong first couple of hours before it finally gives up, finally rolls under the VWAP, finally kind of hammers into the close. So your plan may well be that, but you're going to have to adjust and adapt on the fly, which is why, you know, the best traders that I know have an idea of what's going to happen, and it's important for them to have that, even if it's dramatically wrong, because they can still go, right, well, at least I have an idea of what I'm expecting, and it's a reference point. Just like when you're trading, you have a reference point that you're trading from, whether that's your entry, whether that's the gap level, whether that's the prior day's high, the prior day's low, and we start to look at price in a reference point. We start to look at how the day is panning out due to, compared to our reference point. So our anchor is our plan, i.e. we expect this, but now it's this. And so then we adjust and adapt, and we say, okay, well, we're seeing a little bit of strength. Doesn't necessarily mean the day is going to end strong, but we're seeing a bit of strength in the morning. So is there a trade to be made on that strength, looking for the level that I've already pre-arranged? Or should I be waiting for it to run out of steam and look to short into that strength, because I believe that actually the plan is still going to happen, but it might be delayed a couple of hours rather than a drive off the low, or drive off the open? So we adjust and adapt the plan, or are we completely wrong? Is it just a complete trend day, low to high? And we start to look at what's happening in price, a reference to that. So, hey, it's holding at highs, it's still pushing. Okay, no, it's stagnating a bit now. Hey, it's faking out. Oh, it's starting to test the VWAP a bit more. Okay, maybe we are into this. So you start to adjust and feel what's happening, and then start to change what you expect from the market. Many of the best days that I have are when I have my plan and the market's done completely opposite to my plan. Maybe broadly right, but completely opposite. But I've read what's happened, I've recognized what's happened, and I've readjusted and I've defined what I'm now looking for. Hey, the day's changed, the game's changed. We've got this now, we've got strength. Okay, how do we, well, we don't want to be shorting too early into it. We want to be waiting for extension, or do we wait and see what happens on a pullback? Do we kind of stand back and wait for 2 or 3 phases to occur before we start initiating a trade? So it's adapting to what happens in front of you. It's adapting to the current conditions, and it's tweaking and adjusting. But the importance of having that plan is that you're prepared. Your mind thinks you're prepared. It's the same process every day, and you feel like you're prepared. If you're coming in, just sitting down and clicking away, you're not going to ever do well over the long term. Being prepared, even if that plan is completely useless, means that you have a benchmark to work from. You then look at what's happening at the open, or whatever time, or whatever session you're trading, compared to your plan. Then you look at what's happening in the next phase compared to the open, compared to your plan. Do I need to adjust? Do I need to adapt? And that is how and why it's so useful to have that plan, because you've got the anchor point. You're not just flying around going, oh, it's strong, it's really, really strong. No, you may be strong, but then you're still in the back of your mind, okay, well, it's strong, but let's just think, I made this plan thinking we might have a weak day. Doesn't necessarily mean we're gonna, just because we've got short-term strength, doesn't mean we're gonna be strong, whereas you might look at it differently if you didn't have a plan. You might be like, oh, it's strong, let me just buy, and it reverses on you and rips your face off. So listen, it's not a foolproof strategy by any means, but having a plan of action for what you're looking for, even if it's completely wrong, it's still super, super useful. Take care, guys. Keep the risk managed, whatever you're trading, and I'll see you in the next one. Bye-bye.